Okay, gang, you can see right here how they've been holding these banks up since January. I mean, it's so obvious they do not want these banks to break right through here. So we call it the steel eye beam pattern right here. That's the plunger team holding that up. And we actually been in a range now of this. Here's the range. We just were range bound. I think that's about a range of the banks are. I think that's about that's from about $27 to $28 is quarter%. We have a 3% trading range in the banks. So remember, it's the banks that control the market, how much the market's going to go up or go down. Okay, so 3%. So that's the one problem. Okay, the banks, they will not allow to drop. Plunger team, but they're not bigger than the banks. Nobody is. Now you take and you'll see as a result the S&P. Okay, the S&P itself has been in a range of approximately 258 to 280. Okay, so that's about a range of around, I think, 7%, maybe 8.5%. So that's about right. So you figure 8% is the S&P, and XLF is about, what do you say, 3%, right? Yeah, that's about right. That's usually about the ratio. Okay, it's about the ratio. So that's why it's important to follow the bank stocks. Then you can get an idea what your market's doing, and that's helpful because then you know if it's not making new highs like it hasn't been since January, then we're just, all that's happening is short covering, which creates the volatility of these up and down movements. The best illustration is the utilities. Okay, is the utilities, and you can see it right here. Right here. They rally off the shorts. The shorts sold. I'm going to tell you, I made $5,000. I better now to put that $5,000 in my pocket. I got to buy it, and that's what moves the stock up. They sell it short again. And they say, "Oh, I'm going to buy it back. Put my to get that my profits." So this rallying inside this range, all this is short covering, and this is where people who don't know what they're doing have no idea it's short covering. They rush in, seeing the stock go up. I better get in. And then most of them are up at the top. Okay. And that's what's happening. We're getting the people that are coming in, okay, are mostly retail customers. The institutions, if they were coming in, be pushing the stock market up and out. Okay. So, but this gives you an idea. This is happening if you bring this and extrapolate it back to SPY, and we're getting the same exact moves. Okay, right here. Same exact moves. All these short covering. But at the end of the day, what happens? At the end of the day, we never break out. And that's your proof right here. We never break out. So that's your proof of what's going on, that we are stuck in this range because we never get enough institutional money adding money coming in. So there's no money coming in. It's the same money that's rotating. It's all rotating, just rotating, okay? So you got to keep that in mind, because what we're looking for is to try to buy stocks, and you want them to go up for 2, 3, 4, 5, 6, 7 months, right? You're looking for a long trend. So if you're getting frustrated, it's because you don't understand what I just explained as to the rotation of money, and there's not money coming in, and the market's not going anywhere. That can get frustrating, because then you go to buy a group of stocks. You say, I'd like to be in for 4 or 5 months. Like, for example, if you bought the spiders, you go back a year, okay, on the spiders. Okay. So so now this is when you want to buy stocks, and you get a nice move, just keeps going up and up and up and up. See, that's when you make money in the market, because institutions are putting money in. See, but now when they stop and then short covering, stop, short covering, short covering, short covering, that's where you're getting frustrated, because you can't get stocks to give these long runs when the overall stock market itself is stuck. You see? And why is the overall stock market stuck? Because the economy stinks. Oh, you want to know that listening to these guys on CNBC, but the economy stinks, okay? We're not getting any growth. That's the problem. We're not getting growth. So once again, don't get frustrated. We'll get back to this nice long run. You finally can buy a stock and get a nice long run. Okay. IWM, for example. Okay. Had a nice long run. All right. Then now all of a sudden we're now it broke out. This one broke out. See, she broke out. So that becomes a power stock. So finally, this guy, same situation. We had nothing more than short covering, now finally broke out. And that's what we need to do with the market to get all your stocks moving, okay, and to get back again so you can enjoy these long runs.